Hello everyone, I'm Vikram Kapoor and I lead Bain Company's healthcare practice in Asia Pacific. I spend a large part of my time working at the intersection of healthcare and investments, and I look forward to sharing our perspectives with you today. I have three topics to cover today. Firstly, I'll be sharing a perspective on the near-term impact and some of the longer-term shifts we expect and believe COVID-19 will have on the healthcare sector. Subsequently, I will deep dive into what this means for the provider sector, pharma, and medtech. And finally, I will discuss implications for operators and investors in healthcare in this region. Let's start by looking at the near-term impact to our stakeholders. Safety is paramount as individuals are trying to keep themselves and their loved ones safe. Patients are also looking at new ways to seek care, very often virtually or through alternative sites of care. As the true frontline of healthcare, providers are rising to the challenge, doing their best to support patients in whatever way they can. Pharma and medtech companies have stepped up to develop diagnostics, therapies, and now vaccines while meeting the need for PPE and managing the dislocation to their traditional demand and supply patterns. What we're also seeing is after this initial shock to the system, the stakeholders are starting to prepare for a post-COVID future in terms of both their recovery planning, but more importantly, how they are retooling for a new world. The near-term impact of the pandemic on the healthcare system has been pronounced and uneven, with providers balancing a flooding of acute care sites, while at the same time elective procedures have stalled. What they've also seen is an unprecedented adoption of telemedicine. Medtech companies saw a rapid step up in demand for products critical to responding to the pandemic, while demand for products used in elective procedures came to a grinding halt. They also, in many cases, found their access to hospitals being completely cut off. Biopharma sponsors saw trial activity temporarily slow down, but a massive reallocation of investment towards vaccines and therapies to combat the virus. And finally, payers saw some near-term relief on MLRs as elective procedures were deferred. Now, longer term, COVID-19 has catalyzed some structural shifts to the sector, which are even more pronounced in Asia Pacific. Healthcare is now seen as essential infrastructure. Some would even call it the new national defense. The transition to alternate sites of care is accelerating, with patients and physicians increasingly comfortable with care being delivered virtually or even at home, but especially outside the hospital. Suppliers have seen this as a call to action to diversify their supply chains, some of which you're starting to see manifest in the spurt of activity in the API sector in markets like India. The doctor-sales rep relationship has also been disrupted forever. Finally, the pressure of this pandemic will spark a wave of consolidation with a flight to quality across sectors. Let's now look at what we see as the impact on various subsectors. Within the provider space, we see three distinct archetypes of post-crisis outcomes. The first is subsectors that had a short-term pullback, but with a strong rebound. Electives, aesthetics, and specialist care fall squarely in this bucket. We have a few subsectors which will see a new normal, which we're already starting to see signs of. There's been a rapid migration towards telemedicine, urgent care, behavioral health, and home health. And finally, some sectors will see a short-term impact, but will return to a normal acute care, long-term care fall squarely in this archetype. Now, looking at biopharma, the long-term outlook here is likely to be unchanged for post-crisis. Looking at the three archetypes here, the subsectors that are seeing a short-term pullback but will see a strong rebound include branded pharmaceuticals, CROs, CDMOs, many different pharma services, and life sciences tools. We have a few subsectors which will have a new normal, which we're starting to see some signs of. Data analytics is part of every conversation today. Virtual clinical trials, e-detailing, e-channels. And then finally, some sectors will have a short-term impact, but will return to normal as with most generics. Near-term headwinds are likely to subside for category leaders in medtech. A few sectors like orthopedics, in vitro diagnostics, cardiovascular therapies, and aesthetics saw a short-term impact, but will see a strong rebound. The bar has been raised for hospital equipment. PPE especially will see a new normal. And finally, several sectors will return to normal after ranging from imaging and surgical instruments to dental. Taking an investor lens, even before the crisis, healthcare investing has been on a strong multi-year growth trajectory with a record $80 billion of capital deployed in 2019 globally. APAC was at the tip of the spear in this growth, again with record levels of investment activity. A few notable things we saw in 2019 in the region were, first, a broadening and deepening of the healthcare investment universe as many markets in the region come of age. We saw for the first time $5 billion plus transactions in the region. We saw investors broadening their strike zone from what was historically a focus on India, China, and Australia to also include Southeast Asia, which saw its first wave of mega deals in 2019. The themes we saw investors put capital behind included, firstly, supporting the underlying demand-supply mismatch that has characterized this region for such a long time. Secondly, investing in digital health and healthcare IT as our healthcare systems transition from being primarily offline to online and offline, something we saw a warp speed acceleration in over the last few months. And then finally, supporting local biopharma and innovator ecosystems in markets like India and China. The pandemic has reaffirmed several of the drivers that gave conviction to healthcare investors around the resilience of the sector during shocks, even more so given this is a health crisis. Healthcare investing activity in Asia Pacific had the strongest Q2 in all time this year. The pandemic has also accelerated the importance of healthcare in the portfolio of investors. Healthcare represented 5% of deal value pre-2010, was about in the 10% range over the last few years, and this year it's at about 15% of all capital deployed in the region, right behind technology. So what are implications for investors and operators? Firstly, define how you will outperform competitors and take market share. Now, what could this mean for you? First, enact bold actions now to help outpace competitors in the recovery. What is your M&A roadmap? What is your product roadmap? How are you going to maintain that customer intimacy? Assess and redesign supply chains to achieve greater agility and improve capabilities. Lay out a path to build sustained relative cost advantages, which will be increasingly critical. Ensure your balance sheet is robust enough to create a safety net and resilience against potentially hostile approaches. Prepare for the bounce back and recovery if you're not doing so already. What this could take the form of is just continuing to invest in sales, marketing, R&D to keep your market share. Do not pull back. Prepare your supply chains for that bounce back. Learn from the crisis and build that resilience muscle for future external shocks. They may be economic downturns, terror attacks, natural disasters. Invest in the teams, tools, systems, and redundancies that will protect your business going forward, such as implementing agile ways of working and adaptive risk planning. And finally, embark on your retooling agenda as you start to plan for and leverage sustainable shifts in consumer behaviors such as digital adoption, automation, and a restructuring of our healthcare system. Act swiftly with investments to maintain competitive advantage as customers leapfrog through traditional S-curve progression. In conclusion, we continue to be very energized about the potential in the healthcare sector going forward. This crisis is a period where we will see a separation of a few winners, both investors and operators, from the pack. Now, what will separate the winners from the losers are those who are not sitting on the sidelines waiting for a recovery, but taking action to outpace and outperform competitors. Thank you. Good?